From Allendale, it's January 5th, Thursday morning, and grain markets are under a little bit of pressure. We also had the euro hit 15-month lows against the dollar overnight, which strengthened the dollar and caused the dollar to make new highs. Mainly because of concerns over the French debt auction. It didn't go as well as thought, and also we've got some more debt being auctioned, bonds being auctioned by Italy and Spain next week that the trade is very concerned about if their auctions can go off well or not, or what type of interest rate they might have to be paying. We also had jobless claims come out this morning, a little better than expected, so that's given some support to the equity markets here as we speak. Weather forecast in South America, the other major factor that's controlling grain prices here in the last several weeks. They've added a little more rain to the forecast. Drew Lerner, our weather person, has been saying that they expect to see some rain in Argentina late this weekend, and enough to help control some of the drought situations there. But it may be too late to help out some of the summer crops that are growing in those areas because of the extreme heat and dryness that they've had for an extended period of time. Then coming behind that is what the real question is. One rain is not going to completely solve the problem, but will certainly temper this bullish strength that we've seen here in the grain markets over the last several weeks. The weekly export sales comes out tomorrow morning instead of this morning because of the holiday last Monday. And then the big report next Thursday morning, January 12th, 7:30 in the morning. We've got U.S. crop production, we've got U.S. supply demand, we've got winter wheat seedings, and we've got quarterly stocks, all going to affect the grain market. And Rich Nelson in our office here has done some studies on what happens from the close of the day before the report to the close the day of the report or after the report. And in the last 5 years, we've had significant moves. We've had a 20+ cent move in corn, 36-cent move on average in soybeans, either up or down. But been very significant moves after this report. So trying to guess it is very difficult. We've also got coming up here in a week or so is the Chinese New Year. And once we get through with the USDA report, now we'll have to wonder, what are the Chinese going to do? A lot of times they like to adjust interest rates and things like that before a major holiday. That is a concern. Traders are starting to worry about them lowering interest rates to help out some of their industries, such as auto and the appliance industry that is hurt and slowed down considerably. There's also a big concern about the land prices there. They've went into a land price slump, and that bubble appears to have broken and could cause some economic effects in China. Also, there's been reports here overnight that the food inflation there has increased last week 3.4%, mostly because of vegetables this time. If you remember last fall, we were talking about the increase in pork prices and the demand for pork driving food inflation up. Now it's vegetables that have taken over. There has been concern when we go into the Chinese New Year that their pork industry and the demand for pork could slow down considerably once we get past that. And with as much as they've grown over the last several months, it could cause some a bubble to break in prices there, and could cause some liquidation in their hog industry as well. So there's some big factors coming ahead of us here in the next several weeks that will no doubt create a lot of volatility in the commodity markets. Beef prices on the cutout value, not much change there overnight, very quiet. However, we do expect that there could be some pressure on beef as we go into next week. We go into a regular slaughter week, more cattle being slaughtered, and potentially less demand after we've had the early month or early year demand by retail sector to refill the shelves. That could slow down demand a little bit and put a little pressure on beef prices. Still waiting for cash cattle to be traded. Asking prices are $1 to $2 higher than last week. Really no solid bids. The feeling is that if we had a bid at the steady at 122, we probably would get some trade at that point if the Packers were willing to do that. However, they've been keeping quiet here so far. The pork industry cutout values were down last night or yesterday afternoon. The big concern there is exports, and can we continue to see these hog prices as strong as they are with the demand or product weakening here. So we've got export numbers coming out on Friday morning. That'll be watched very closely in the pork industry as well. Is China buying pork? Is Hong Kong buying pork? That's the question. And if we continue to see strong export business, we should be able to see some support come under this hog market and hog futures here as we move forward. So a lot of volatility potential here, but until we get closer to those dates, which is next week basically, the key date in the USDA report, there's going to be a lot of adjusting, positioning here, and we feel like there is an opportunity now that hedgers need to take a look at pricing some December 12 corn. Contact your Allendale representative to get the ideas, share some ideas that might work for your operation. So give us a call here at 800-262-7538. Last minute reminder here, sign up for the Allendale Conference coming up on the 20th, 21st of January. There's a few seats available yet, and we'd like to have you there. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.